Good morning, all. I hope you are well, and welcome to this morning's video. So, this morning I have three pairs on watch, and those are Euro dollar, Euro CAD, and dollar Swiss. So, I'm going to break them down for you now. I haven't made a video for a couple of days because the market has basically been looking pretty awful, but we finally had a little bit of movement. And again, I don't think a lot of the pairs that I have in my various watch lists will be ready necessarily today, because after a big move or big moves, the market needs to correct for the next leg in whichever direction it's traveling. Okay. But I'm just keeping these on watch just in case. I think Euro CAD looks the likeliest to be ready by the end of the day. But without further ado, let's break these pairs down for you now. So my favorite of the bunch, for a variety of different reasons, which I factored into my forecast last night when I created the forecast, which I have on these pairs. My favorite of the bunch is Euro dollar, and you can see that on the higher time frames we have this last exchange of liquidity just to the right of this little dinosaur down here. Okay, and we have this 1, 2, 3 touch structure. So just breaking the pair down for you in the same way that I would when I create my forecasts and my various watch lists. It doesn't take me nearly as long to do it as it does to explain it to you guys and girls, because when you've seen these patterns enough times, these things are just blueprinted in your mind, and as I get more experienced, they're becoming even more blueprinted, the various things that I look for. But just breaking it down for you now, we have this 1, 2, 3 which taps into this last exchange of liquidity. We have a middle section within that. So at this time, no need for us to come back down here, because we've taken out this exchange of liquidity, which caused, just to touch on it, a big run off to the upside. Okay, we didn't pull back with any degree of depth until all the way up here. So there was obviously a lot of liquidity by definition. Okay, so we don't need to come back down to there at this moment in time. So now I zoom into the next piece of the puzzle. Okay, so here you can see we have a reversal structure. Okay, we have this reversal structure where the legs, the 1, 2, 3, the first leg and the third leg are of a similar length, giving me a clue that they've likely completed, especially when they line up with an exchange of liquidity here, where there was volume which triggered a big run off to the downside last time around. Okay, so no need for us to come up to here at this moment in time. We also have a series of near misses here, which near missed to this low here. So it's no surprise to me that when we tap that liquidity, we came all the way down to here to this low, which these lows kept near missing too. We tap into that and then we move to the upside. So at this moment in time, no need for us to come back down to the base of this overall structure. Okay. So then I zoom in to the next piece of the puzzle. You can see it is Thursday. Okay, so this isn't closed yet, but you can see if I just move this out of the way a little bit, you can see when we have a big bullish candle like this with a big wick below it, that is a big clue that we're likely moving to the upside to potentially take out this high, which this high near missed too. Okay, so just looking at that at the moment. So what I'm seeing here is potentially this could be, now that we've tapped into these lows here, this could be an impulse correction continuation to push higher to tap into this area, and then we would have this kind of structure. Okay, and it would be parallel as well, so that kind of makes sense. Okay, I'm just going to zoom in. We do have to remember that we have a slight near miss here to this low. Okay, if we zoom in, it'll become a little bit clearer. So you can see here we moved up. We had this 1, 2, 3, where the 1 and the 3 wave are of a similar length. We then tapped just above here, but we left a gap to this high here. Okay, and we moved down. If you look, our price has been moving down. We moved down more correctively than we moved up, giving me a clue that this is likely an impulse correction continuation to push higher to take out this high, which this high near missed to complete that. Okay, that move, and then we would have a parallel structure, and then this would be the middle section. So perhaps we're coming out of the middle section now for that impulsive leg to complete this structure, okay? And if we just zoom in a little bit, the next question I ask myself is, did we actually, you can see we have this green candle here with a bit of a wick below it, okay? So did we tap into an area of liquidity? Well, we did. We tapped into, there was a sharp move here, sharp move down, followed by a sharp move up. And then we had, from that sharp move, last time around, we had an impulse correction, continuation. And we moved all the way up to here before there was any sharp pullback, suggesting that there was a lot of liquidity here, and that if we tap into it again, we will likely move with a similar level of aggression. And if we just measure that, okay, where price started to pull back deeply, what do you know? We're moving with a similar level of aggression. You can also see where the buyers were trapped into the move too early, okay? So if we take that as our area of value, as I said, the sharpness often indicates the amount of liquidity there. You can see here that the buyers started buying. Okay, but what do I always say on the higher time frames? Well, this isn't actually a higher time frame liquidity point. It's more of a 4-hour one. But you can see here, nevertheless, that people started buying. It comes back down. All of these people who bought there get washed out. And then the big money steps into the move for a move to the upside. Okay, I was looking for an entry here. I didn't manage to get it. There was no entry here. It was a bit of a wick, so I was just looking for, something more of a base, but I didn't manage to get an entry there. In any case, it would have been higher risk for reasons which would take me too long to explain during this video. But what I'll be looking for now, you can see there was a sharp move here, okay? There was a sharp move there, but we didn't react from it, giving me a clue that there was not enough liquidity at the start of this running channel. We can kind of separate these structures, running channel there, another running channel. There was not enough liquidity there to send price to the downside. So this gives me a clue that this is just something in the region of this shaping up. Again, I don't think this will be ready by the end of the day, but the market doesn't care what we think. What I'll be looking for is, given the aggression of this move, how far we've moved, and various other factors considered, what I'll be looking for is I'll be looking for price. I'll be looking for a 3-touch 1-hour continuation or a 2-touch 1-hour continuation with a 3-touch structural approach leading up to the first touch. And then I'll be looking to get long with a risk entry within the flag, and then I will be able to manage it up to this high here and this little high here. And the reason this is significant is because we have an exchange of liquidity here, where there was enough of an exchange of liquidity last time around for price to smash through all of these lows, smash through the brick wall, as it were. And we also near missed this high, near missed to that. So this is an area of interest to me. So I would be able to manage that up to this high for something in the region of 3.5%. And of course, if that kept going, okay, if we did have something like that, and we measure the impulse there, okay, and we assume that the leg out of it would be of a similar length, and we also measure it from the break of the correction as well, because often the volume that's been built up within the correction can dictate how far the move to the upside occurs. That would take us up to this high where there was a sharp move as well. So what I would do is I would use the mechanical management tool, and I would measure from range to range. And what I would do is I would set a take profit at the 90% rule, 90% mark, where price typically pulls back more sharply, which just so happens to line up with this sharp move there, where there was a sharp move up and a sharp move down. And I would trail my stop loss accordingly as well. So at the same time, so that is what I would do there. That is euro dollar. Okay, let's move on to the next pair, which is Euro CAD. It's got obviously going to be a similar story with Euro CAD, given the correlation between the Canadian dollar and the US dollar. Similar thing. Okay, we have this sharp move down there, followed by a sharp move up, which caused this massive run off to the upside. What happens? We near miss to that area, and then we have this corrective price action, and then we come all the way back down to tap into the area where we near miss to. So often the near miss gives us a bit of a clue as to which of the lows, if there's multiple lows, it gives us a clue as to which of the lows is actually the valuable one. Okay, so we tap into that area and we move with a similar level of aggression. Okay, we have that move there. Okay, we've moved up with a similar level of aggression. We then have, if we just unpack the different elements of this, what did I just say? We have a near miss to that low there. We come back down, tap into the area, break just below, bargain area of value for a buy. We move to the upside. So no need for us at this moment in time to come back down to here, because this is a completed piece of structure within this potential impulse correction continuation to push higher. Okay, so we zoom in a little bit more. You can see we've got that weekly candle. It's not closed yet, just as with euro dollar. We have that weekly candle with a big bullish candle with a big wick below it. This is not the kind of candle that you typically see, although it's not closed yet, where price just comes back down again. It could do if it was forming like tweezer bottoms, okay? But when you normally see that, it's usually a lot of liquidity being grabbed, if you want to use that word, for a move to the upside, okay? And as we zoom in, you can see that we have these highs here. Okay, it looks like we've tapped into an area of significance. Okay, so the first clue that this could be a move to the upside is the fact that when we tapped into this area, okay, last time around, we moved down very correctively. Okay, when we see that, that's often a clue that this is potentially a middle section for a move back up. To complete this a structure such as this, okay, which would give us that more parallel structure. And the other clue is that we've tapped into an area of liquidity there, which caused the run off to the upside last time around. We break below, bargain area of value for a buy, okay, and then we have the big wick. We have a daily candle with a big wick below it, suggesting that we washed out, that this is just a washout of all the orders before a move to the upside. Okay, if I just zoom in a little bit more, okay, we have this exchange of liquidity here. If we really zoom in, okay, we have an exchange of liquidity there, where there was a bit of a sell-off, okay, and then what happens here? We tap into the area. Once, twice. Okay, we didn't break above it, suggesting that this is potentially that move that I'm talking about, which would give us that. We've already got that parallel nature. So I'm just seeing this. We've broken above here, and price at this moment in time didn't find enough liquidity to send it to the downside. What's it doing? It's correcting above it. Okay. One of the reasons this is slightly lower down on the list is because we're kind of correcting through here. You could argue we're retesting the back end of that, but we're kind of correcting through it and not below it. So that is a positive. So what I'll be looking for from this pair today is the following. Okay. You can see the correction already starting to shape up. You can see where the sellers got trapped in here. People started selling. They got completely washed out. And now we're just correcting above these highs here for that move to the upside potentially. Okay. If we just zoom in, you can see the structure starting to form. Here's the base of the structure. That's what I thought would be the base. Okay. And you can see that we may be getting that 1, 2, 3 structural approach leading up to that, but we don't have much depth at this moment in time. Price is just correcting. So I'm looking for a bit more depth. Okay, for price, and then for price to push back down into the area for potentially that next wave to the upside. Okay, so what I'll be looking for here, as the forecast says, is a 3-touch 1 hour continuation or a 2-touch 1 hour continuation with a 3-touch structural approach. And then I would look to get long with a risk entry within it. And then I would be able to manage it up to this consolidation here. And the reason that's significant is because when this price consolidated her last time around, there was enough of an exchange of liquidity for price to smash through all of these lows, suggesting that should be an area of interest to me. Okay, and I will be able to manage it up to that area for something in the region of 3.5% to 4% profit. And of course, if we kept going to take out that high there, then there would be something in the region of 10%. And what I would do once again is I would use the mechanical management tool to set a take profit in this area whilst simultaneously managing my stop loss. Okay, so I have an alert set just there. I'm going to set another one to see if we can push up and get a little bit more depth. Okay, And that is my stomach rumbling, if you can hear that. So I've got one alert set there to see if we can push down to there, another alert set just to see if we can push up and get a little bit more depth. But I'm just going to break down the last of the pairs, which is dollar Swiss. So if euro dollar is moving to the upside, okay, which would imply euro strength against dollar weakness, then it's likely that dollar Swiss is moving to the downside, especially given how in alignment with the DXY it looks. You can see the DXY, the dollar index, selling off from an area of value. So it's likely that we will get some kind of sell-off from dollar Swiss as well. So if we zoom in, the picture as I see it on dollar Swiss, okay, we have this low here where there was a very, very, excuse me, a very, very sharp move to the upside, sharp move down, sharp move up. So when we near miss this area, okay, it's no surprise to me that we come back down, tap into that area, break below, bargain area of value for a buy, and then we move to the upside. I'm just speeding up ever so slightly because I've got a lot to get through. Okay, so we have that, and then we have this. We tap into, if you look here, there was an exchange of liquidity here where there was a very, very aggressive sell-off to the downside. So I'm not expecting us, because we've already tapped into that area, I'm not anticipating a move all the way down to here. But what we could do is capitalize on a shorter term move to the downside. You can see we've been moving in a very direct manner. Impulse, correction, impulse, correction, impulse, completed piece of structure there, move to the upside. But you can see even on the daily chart that we've formed this 1, 2, 3 reversal structure. Okay, so potentially we could be moving down to the start of this correction for potentially the next wave to the upside. Okay, you can see, look at the very bearish daily close there yesterday. Have we tapped into anything? Well, if we just zoom in, you can see that there's multiple inflection points, which is partly why this is lower down on the list. But there was an exchange of liquidity here, which caused price to smash through all of these lows and the neckline of this head and shoulders pattern. Okay, and if we just zoom in, so that is an area of value for me. Okay, we have that high there, but you can see I'm just seeing this as, we have a near miss there to this area of value. We come back with sellers get involved, they get washed out, and then we also have that 1, 2, 3 where the 1 and the 3 wave are of a similar length, and this gives me a clue. And once again, the sellers get trapped in, they get washed out, and then we get the move to the downside. Okay, if we look here, there was volume built. So we had the impulse down with the sideways correction. That was volume being built. Everybody gets washed out, and then we get the move to the downside. So what I'm seeing this as is a correction below this low for the next wave to the downside. Okay, so what I'll be looking for in this instance is the following. I'll be looking for, once again, a 3-touch 1 hour continuation with a 2-touch, or a 2-touch 1 hour continuation with a 3-touch structural approach. And then I would look to get short with a risk entry within it. If we just zoom in, or try to zoom in, there we go. You can see that we have that sharp move is actually above here. So we may not come all the way back up to there, but I'll be looking for this kind of structure here, this 3-touch 1 hour continuation, or the 2-touch 1 hour continuation with a 3-touch structural approach. Then I'll be able to manage it down to these lows, and then I would set a take profit in this area. Okay, this I won't be taking unless one of the other entries shapes up, because it is higher risk. And the reason it's higher risk is because the question I always ask myself is, if price was to take me out, why would it do it? Well, we have that near miss to that high. Okay, well, if price was to take me out, what would it look like? Well, it would likely look something like that. Okay, and then we would have that kind of structure there. Does that look abnormal to me? If the answer is no, then this is a higher risk position. Okay, so that doesn't look abnormal to me, so this is higher risk. So therefore, because it's higher risk, I don't take higher risk positions unless I'm in profit by 2% for the month. And since none of my entries have shaped up this month, once again, then I will not be taking this until another position puts me in profit by 2% for the month. And that is my rules. That's what I'm going to be looking for today. I hope you've enjoyed this video. I hope it's provided you with some value, and I will see you again in the next one. Thank you very much indeed for watching. Have a great rest of your day.